morning, guys. Richard Jacobs, founder and chief trader at Underdog Investments here. It's been a really long time since my last YouTube video, and it's actually something that I want to start producing more of because one of our ambitions, call it ambitions from an educational perspective here at Underdog Investments, is really to work on creating sustainable retail trading businesses, helping retail traders out there to be consistently profitable in terms of their trading businesses. And very often, too often, we come across those traders who have all the potential, they have all the motivation, but they're just struggling to achieve that consistency in terms of what they're trying to do. And so the way we approach it, and it's really a cornerstone of what we focus on here at Underdog, is the importance of understanding price structure. So today I thought I'd put out a very short video with a chart that one of our Underdog Trader Development Program students flagged to me during some of the structured learning sessions we do as part of the program. And what caught my eye with this particular chart was how, with nothing but just the basic application of good price structure principles, there were opportunities to not only get insight into what was happening in the markets, but also the opportunity to potentially get in a few profitable trades in the process. So let's switch over to the charts and let's take it from there. Okay, so what we have up on the screen is a 1 hour chart of the South African Top 40 Index. It's running from about the end of Jan 2017 to around about the 13th of Feb. And what I want to highlight to you guys is this. You see here at the end of January the market pushes up, and this is the price structure that we're drawing in here to make this higher high. And then the market really rolls over and pushes all the way down, breaks this previous structure support level right there. It pushes down, then it retraces back up into structure. But notice it doesn't break structure to the upside again. It just retraces back into this structure level over here and puts in this lower high. And then we have the continuation move to the downside, all the way down to there. Market puts in a lower low. Then it retraces back up. Where does it retrace back up to? Just look left. And you'll see that it pulls back into that previous structure support. Now resistance level over there, before it continues to the downside, putting in a new lower low. Then it actually retraces again. Where does it retrace to? Look left. Previous structure support becomes resistance. Market finds its top there, puts in a new lower high, pushes down to the downside over there. Let me just get that arrow properly. Pushes down all the way down to there. Then we get another retracement right there. Now this is an interesting one, and it's starting to give us our first clue that things may start to change, because look what happens here. The market pushes up, breaks the high, but doesn't close above the high. Now when that happens, and let's just put in a line there just to highlight it. You've got this push up, puts in a higher high, but it doesn't close above the previous higher high. So it's not a break of structure to the upside as such. So what you want to be doing here is just being a bit cautious, because we're not seeing a definitive break of structure, but at the same time we have to worry about whether or not the bullish trend, which is clearly evident over here, has the legs to continue to the downside. And sure enough, what we see is the market then pushes down but can't put in a lower low, and instead what we have is the market breaks structure to the upside, and we've got a new structure high forming over here as we break and close above this previous structure level. Now when that happens, we want to be looking for long opportunities, because look what happens. The market then retraces or pulls back. Where does it pull back into? Look left. Previous structure resistance becomes support, and then the market pushes up again in a new uptrend. So guys, that's just a you know, I've just got a price chart on here, and I've literally just drawn in what we're seeing from an understanding, a basic understanding of price structure. And you can clearly see how as the market moves down here, we have a very clean price structure move to the downside. Then the market enters into this consolidation area over here before breaking to the upside and starting a new trend to the upside. So that's just in one time frame, um, and with no indicators, a basic understanding of how what we can see with price structure. Now, I also promised you that there will be trading opportunities here, and very importantly, you know, it's not a case of just going out there and trading whatever you're seeing. What you want to be doing is you want to be developing trading rules, systematic trading rules in line with a tested plan, and using those to really plan where and how you're going to get into your trades and how far you're going to run them, etc., etc. But just from a basic perspective, you know, once we make this initial or this break of structure to the downside, every time we have a retracement back up into structure, we can regard that as an opportunity to get short. And you'll see if we pull back into structure, get short, pushes down, pull back into structure, get short, pushes down, pull back into structure, get short, pushes down. We might even do it on this leg over here, although we won't get the push down to our ultimate target that we would potentially be looking for over there. So, and then, you know, the opposite move also applies. What we have is we have a break up to the of structure to the upside over there, and then we have a pullback into structure here, and this is an opportunity to get long, and we can then ride it to the upside. And as I said, you know, the mechanics of how and when you want to get into these trades, there you can start adding more sophistication in terms of rules. Maybe you say something along the lines of you want the retracement to at least pull back into a 38.2 Fibonacci retracement level. Let's see if we can do that, or 68 61.8, for example. There market pushes down, then retraces all the way back up into that 61.8% level, and almost reverses on a dime before it pushes down. So I don't want you guys to worry too much about where to enter the trades for the purposes of this video, but what I want you to see is that just that basic understanding of the flow of the markets and the understanding of price structure and how we actually draw this price structure allows us to see the downtrend, it allows us to see the consolidation, and it allows us to see the breakout to the upside. Guys, as I said, very short video. Hope you guys find it useful. If you do, just please press that like button under this video, and share it with your with anybody that you think would be interested in this kind of thing. And hopefully we'll start producing more of these things, and it'll start getting some traction out there. Until then, guys, trade well and good luck with your trading. Cheers.